share my screen. Yeah, I'm recording it for you, so I'll send it as soon as we're done. I think this is going to be a relatively quick meeting today. I hope everyone had a great weekend, and let's get into what we've got left over then from Asia and Europe. So today being Labour Market Day in the US, so the Nasdaq and New York Stock Exchange are going to be closed. They'll reopen tomorrow at 9:30, and the US bond market is also closed today um, to celebrate this annual celebration of the social and economic achievements of American workers, aka Labor Day. Now, that's not to say that we can't see movement in FX. Hello, I can't hear. Right, some of you can't hear. Okay, some can't hear. That's a real pain. So, who can hear me? Please let me know. Really got to get this sorted out. So, we're going to resume. Right then, let's just. Great. Okay, let's just remind ourselves where we're at then. So, essentially, markets continue to lean dovish. Okay, that's the main theme. They continue to lean dovish in terms of the Federal Reserve. And that is despite an outsized market reaction last week to jolts and other minor data, and the little reaction to an elevated PCE reading. Now, PCE, share my screen. Okay, we'll do. PCE is the Federal Reserve's preferred measure of inflation, and it was rather elevated last week. Okay, that screen that I've shared there, that's looking at the DXY by the way. Um, Now, because of that, we were looking for, well, we needed to see a huge upside surprise in the non-farm payrolls to really shake up that dovish sentiment, and we didn't get that. It came in below expectations, and that therefore reinforced the dovish sentiment, and that sentiment is obviously going to continue into the September FOMC meeting. So we need to wait and see what the outcome of that, and the odds of that for them raising rates has really dwindled to probably below around 10%. I haven't checked, but I mean it was around about 10% before the non-farm payrolls. The odds of them hiking before the jobs data on Friday. Okay, so that's the sentiment on Monday, and we've seen that dollar trickle off. Um, and that data, if you recall, came in again, I think for about the third time in a row below 200,000, came in at 187. Um, and also the average hourly earnings was slower than expected, and the unemployment rate ticked up as well to 3.8 amid a jump in the labour force participation rate. So overall, it was a weaker headline with higher unemployment. So that's probably restricted enough for the Fed. Then we had data that came out to the contrary, with ISM manufacturing improved. So we got a bit of a mixed day, didn't we, on on Friday. Um, and that's what we've been left with for today. So we're sort of feeding on the scraps of Friday. And that probably would result in a weaker dollar. We've got, let's have a look what's going on here. So yields obviously closed for today. If we look over at the euro, and let me know if there's anything you want me to go through particularly, but we're looking for setups. So we're looking for stuff that could give us an opportunity today for the remainder of Monday ahead of Asia opening. I think the major event today would be the RBA, by the way. Also, we've got Chinese Cajun services, just showing the calendar here. So the Reserve Bank of Australia and China data. So maybe the focus is going to be on the Aussie. If dollar is getting weaker, why isn't Aussie getting any stronger against the dollar? We'll look at that in one moment. So we're looking at the euro for the time being. The euro is crested here above yesterday's closing price, Friday's closing price. It is technically in a bearish environment, but it's finding support at last month's and last week's lows. So it's yet to break below there, and I wouldn't be surprised if we do get a break below there. But in a weak dollar environment, the euro is picking up, and we could see a correction up into this higher volume area on the left here, and Friday's point of control. That's what it seems where it wants to be heading to. And that would be in a, let's have a look. That'd be encroaching on a 61.8 Fibonacci retracement of Friday's range. Okay, now if we were to pull that out to a daily chart, as I've mentioned before, usually, I mean, we haven't had a break of structure, but that daily 1, 2, 3 days of shorts in the market would usually be met by a correction of a day or two, perhaps. So perhaps we're starting off the week, and Tuesday could well see a continuation. So it may take today and tomorrow combined to get up towards 108.50. If today remains sleepy. So that's the bias really at the moment on the euro for a move up, but there's still prospects of a continuation to the downside and a test below last month's lows, last week's lows. But we'll just have to see how that pans out. But there's nothing really jumping out at me in terms of a setup at this point. All right, so moving on. Sterling would be the same format, virtually looking the same sort of trade or market rather. All right, so we'll move we'll move down the list. US 30 remains inside of Friday's inside day range. So Friday was an inside day. Today is an inside day of Friday's range. Usually what you find either side of these inside days are accumulations of stops. quite often the market will come up and trigger both sides of those. The Nasdaq, this is obviously the CFDs, right? So they're trading as usual, and currently inside of Friday's range. On Friday, the market came up to print a high for the week and dropped off, okay, eating into longs, and gave us a first red day. So what that tells us is that the market could be prepared for a sell-off. So I'd be looking for a market here that breaks this trend line, and when it does that, well, in order to break the trend line, first of all, we need to look at structure, don't we? So let's just check that out and see where we're at. We might get an opportunity in this today. We need to check out the structure. So where is the structure, guys? It says down here. Okay, so we need to see the market penetrate this level on the 15-minute chart. Ideally, we want to see a close below there and a move back in to short. But at the moment, we're front side of the bullish trend. So until it breaks that level I've just highlighted, this is a bullish trend. But if it does break this level here, I'm going to make it a solid line, so we know it's a solid support at the moment. If it breaks that, then we'll start looking for our shorts to go back towards Friday's closing price and beyond, and a continuation to eat into longs. All right, so that is on the watch list for today, the NAS 100. Same scenario for gold. Very dirty chart. Let me clean it up. We have the same scenario on Friday. It came up, printed a high for the week, came back down low, and closed low. All right. Now, what we're having here is a move up, potentially to sell off in line with the first red day setup. So we had Monday, Tuesday, Wednesday, Thursday, all longs, apart from, well, Thursday was not printing any new highs. So that was a day 1, 2, 3. Hit both sides of the stops and closed sort of mid-ranged. So it's cleared stops up top. It's made way for a move lower down below, right? And clearing out stops below here. And that move, bang, moved up again. So the bias is to the downside with gold at the moment. Despite a weaker US dollar, that is the setup on the chart. So given the weak US dollar, we're not going to see much in gold, I doubt. But if we get a pickup in the dollar, which we might, so we've got this impulse correction impulse potential. So if we do get a pickup in the dollar, then that's obviously going to be favorable for a short in the price of gold. So just looking on the daily chart, DXY. Potential support. We've got this Tuesday's point of control an opening price with Monday's closing. So the initial balance of last week potentially acting as support. The initial balance lows potentially acting as support here, which could give us a bit of a move up on the day, maybe, to play into that gold. So we'll just keep gold on the watch list. And now we've already, I mean, the short was in London, wasn't it? So let's see if we don't see the price sold off here a little bit, isn't it? So we're front side of the bearish trend in gold. Looking for a continuation trade. Selling from the top of that channel. So we're coming off from the high of the session, New York. Breaking structure. Right, so we've broken structure already. So we're technically bearish on the session. Right. So perhaps we're going to see a move back in. So just keeping an eye on this. Rather than going in, want to see confirmation of a second peak. A second peak and some bearish structure to sort of lock in these highs for the day, potentially. So we're calling that highs that are locked in. Sort of running away here without us, but you see, for me, the entry would have been this candle here. All right. So we want to see, for the premium price, it needs to be back up in here. All right, so we're just going to be patient and see if we don't get a pullback up into level 3 for the short. So could be an opportunity there in gold. Same scenario for the S&P. Same as the Nasdaq, really. Same sort of setups, or markets at least. So we need to see the market up high on the day in order for a we need to be up in level 3. We're coming up into level 3. We're in a broken down market. Those are the lows that we've just broken. So really then, this comes down to timings. You want to wait for your market to set up. Now I've got a bullish structure here within the within the within level 3. The day itself, we're up high on the day itself. You've got all of this length here that's been built up. Still front side of a trend. But we are backside of this one here. So we're chipping away here to the downside. So this is the line 45.19. It's a bit low down for us. Shorting inside of the day's range. So you'd want to see a break of this trend line here and a test of this support here, and then a revisit to the upside for the short. And that would be in line with the maybe clear up the entire chart. It's way too messy. That would be in line with the first red day of last week. Alright, so we're coming up potentially to come lower. On the day, we're just being patient and waiting for the setup. Redrawing this so it's legible to you guys, as I know that my charts can be complicated with all the bits and bobs on there. Okay. So all of this length, guys, is what we're looking at from Monday's opening balanced lows. We're looking at this area below here. That's not to say this can happen all in one day. This is what we're looking for the days ahead. Move into here. Based on this high break of structure, okay, first red day, sell high to come low. And then on the day itself, we were looking at the internal structure on the day itself. So we've got here, we have had a break of structure. It's a bit too front-side-ish to me at the moment. So this was the break of that move there, but not the entire day. The entire day still has still a way to go in order to really confirm the move down. So we're just going to sit back and let that play out. Let's see if this all remains as trapped traders up top. See if we don't get a test of 45.20, and then that would probably leave us leaning then to the downside. Right. So we've looked at gold, look at dollar CAD as a first green day. So on Friday, came down low of the week, ran higher. So this is a buy low market. So this is at the top of the day's range at the moment. So I want it to head higher. It's just starting to break to the upside. So it's now the front side of that bear trend. It's a continuation trade to the upside. Can't really do anything in level 2 or 3. We want it down in level 1. So we can be patient and wait and see if there's a pullback, bullish structure to ride it higher. You've got this W formation, so I think coming back to the day's point of control could be an opportunity in and around here for a move up in dollar CAD. And same scenario with dollar yen. So waiting for the pullback to take it higher. That will play in with our bullish scenario, potential scenario for the dollar, and therefore opportunity in gold to take it lower as well. We need that pullback. All right, so being asked euro sterling. Euro sterling. Coming back into London shorts. So last week, looks like a continuation trade to me. Last week we were up high. 1, 2, 3, 1, 2, 3. It's because we've what I would like to say is that we're coming up on the 3-day cycle. So we've had short, shorts. 1, 2, 3. 1, 2, 3. So really this on a day 3 cycle, being day 3 on the 3-day cycle, This would be a correction into shorts. Let's see if we... It's on the front side of this still. This is the bear trend, front side. If we can get onto the back side of it, above these highs, then you can be looking to buy low for squeeze up to the upside. So this is here as resistance, you see. So if not, it's a continuation trade. But if it can break, we really need to see it break above. Let's have a look. Well, it's already broken this here. So it wants to come up and test this resistance, and it's got prospects of that. We've got peak formation low, impulse correction continuation. Difficult to buy into all of this resistance, but you could go in half-heartedly. But you really need to see an engulfment of this. You need to see a strong bars, strong momentum bars here in this area for this to continue higher. It's not ideal. I mean, you're pretty high up. Well, you're very high up on the day, aren't you? So not ideal, really. Not best candidate, I don't think. CHFG, hourly chart. So this one here, day 2 continuation to the upside, peak formation. This is the daily chart. I'm just looking at this. I mean, we penetrated this low with that wick. It's quite a strong recovery. I think this is more of a continuation to the upside at the moment. May struggle around here, but if we can get a little pop up, it's got a nice path all the way into this here. So bullish while on the front side of this trend, continuation. Peak formation down here, short squeeze back up towards last week's highs, last month's highs at the moment. Being asked here, euro dollar again, just quickly touch on that again. We could be petering out for a move lower. Impulse correction yet to test the 38.2. Impulse correction continuation to the downside, or if the bulls can stick with the bullish trend, it could be grind up into towards the 61.8 50% area, as highlighted there on the chart. Being asked what's going on with euro yen at more than 16% this year, and surely it's near the top of the year. How far can the bull take this before we see a more serious correction? And what should we look for as footprints for the correction down? Well, let's do a top-down analysis on this. So we're still front side of the weekly trend. There's no real chart pattern standing out to me on the weekly chart at the moment. To the monthly. So we are coming up into so we're up into the supply area. And just a volume profile on this area, from there to there. That there is the point of control. And here. Okay, so on the monthly chart, there's still room to go up towards 16250s to meet the point of control of all that congestion area, that area of the supply area, right? So currently taking on what would have been higher volumes in here. Actually, we've got a gap in the volume profile between there and there. So we're coming up into current resistance. seems to be, yeah, okay. So I was just zooming in on that. This here, okay, so between, this is the daily chart I've zoomed into on, I've gone back to that monthly candle. There seems to be quite a bit of a void for the market to shoot through. Um, right, so where we are now and up to into here, the market can move through quite easily, and then we've got resistance at 162. Right, so that's an analysis of this area here on the monthly chart. All right, so we're coming up to an area that's void of resistance, really. So we could move up into the 158.50s quite easily before we start seeing some kind of resistance, and then a break through there for a move up into 162. The support here is holding so far on the daily chart. So despite that strong move down, until it breaks 156.80, you're still front side of the move, so bulls remain in charge with euro yen. Okay, and we were going to look at the Aussie, weren't we? Because we've got the RBA coming up tonight. Now, with the RBA, um, the RBA is expected to leave the cash rate unchanged at 4.1%. No problem, Top Cap. Thank you for being here. So the RBA is expected to leave the rate unchanged at 4.1%, due to an encouraging CPI print in July. Now, the data of late hasn't been particularly inflationary, so it's just essentially probably going to be a benign outcome, really, at the RBA, but surprises can crop up. Um, yeah, the RBA is data dependent, month on month. In July, the CPI inflation continued to decelerate year on year, and there were signs of job losses as well in July. So let's see. I mean, we'll listen to Governor Lowe. But there aren't any. Um, the market is not looking for anything um, particularly new from Lowe or this meeting. It sounds as though it's going to be a benign event. But in terms of how it's set up, monthly chart looks somewhat bearish. correction hasn't quite come into the key area between the 27 and 61.8. It's come down, corrected, and looks as though it's building its case for lower. On the monthly chart, fit in to a more robust US dollar. However, on the weekly chart, there might be more upside to come before moving lower. We've got that M formation here. It is a slightly overextended right hand leg, but there's still prospects of a move up into the neckline, but maybe we should be just satisfied with a 38.2 correction. So we're a little bit off the 38.2 yet. So there are still prospects of a continuation to the upside. On the daily chart, nothing standing out really. Zoomed in here on the 4-hour chart. Now we have had a break of all of this support in that strong candle. We've had a correction up. We've done a 50% mean reversion of that move, so perhaps we're going to trickle lower in the near term. I'm being asked for US 30 again. This was an inside day on Friday, so we're looking for a run to hit stops either side of the range of Friday. And we're currently heading up towards stops up top. Right, so this is zoomed in on the US 30. So you've got stops that are going to be up here and stops down below, but it looks like we're coming up towards these stops. Front side of the trend. Now, with that being said, we can monitor the S&P and NAS potentially leading the way for a sell high opportunity. So the US 30 would likely be in line with movements in its counterparts. So whether it can come all the way up to hit stops, it can do. But we need to see the NAS and S&P continue to creep higher, probably. They are in bearish territory at the moment, given that high up on the day, closed low on Friday, so this is a correction to sell high. And that's what we're looking for. So at the moment, by the way, the NAS is coming down to our support line that we want to see broken, tested, and that would mean that we're seeing something similar over here in the S&P. But this one's quite a way off yet. We're coming into this cluster here, this cluster of trendline support that we're testing. Inside day bars, turn those off to see what's going on. could say we're in a broken down market here. This was the low there. So this could be an opportunity to be shorting. This was the structure. It's broken here. Let's move back up. Peak formation again. We've got 1, 2, 3 tests the highs. All right, so looks like we're getting something from here. So there you go, guys. That's the analysis for this morning. And I wish everyone good luck. Thank you all for being here. And we'll continue to parlay in the Ask Our Analysis chat room. All right, guys. So best of luck. And may the markets go with you.